Hi, and welcome back to the channel. On today's program, we're going to discuss questions you should ask financial advisors when interviewing them. Hi, I'm Gerald Marquith. I'm a certified financial planner, been in the industry about 30 years, and this channel is dedicated to those 50 and under for things that you should have learned in high school and college, but for whatever reason, they never taught it. So let's kind of get into this subject. So you've decided that you want to invest and manage money, but you don't feel qualified to do it on your own. In fact, you don't really even know where to start. And so what you've decided is you'll seek out financial planners or financial advisors to help you guide you through this process of investing your money. But there's questions you want to ask them and things you want to know, and that's what we're going to run through today. Some of these questions, actually, I would say all of them are very important, especially the last consideration in this program today. I want you to think about that item at the very end very carefully. So, when you're meeting the advisor, him or her, the first question you want to ask is, are you a fiduciary? This is a really important question. Not all advisors that you talk to are fiduciaries. That means that they have to look out for your best interest. Now, in the case of a CFP or CPA or other licenses they might hold themselves out as fiduciaries right away. It's important for you to think about working with a fiduciary because they have to put their interests before yours. They have to make the best choices given the circumstances you have. So being a fiduciary is an important thing to consider when picking out an advisor. And if they're not fiduciaries, I don't necessarily want to eliminate them, but something you certainly want to think about. So then you may want to ask, well, how are you paid? What's your compensation? Are you on commission, say? Are you on fees or fees only, or maybe a combination of both? Now, there's nothing wrong with someone who's on commission, but they need to spell that out for you. They need to put that all in writing, what they get commissions on. Likewise, a fee-only planner should put on there in writing what their fee structure is. Typically, the fees are about 1% a year. However, if you're bringing a sizable portfolio to them, they might be able to reduce that down, maybe even down to like 0.5%. That's it. Fees are important because whether you make money or not, you're still going to have to pay the fees. So you want to be aware of it. And in the industry, fees are everywhere, not just with your advisor, but in things like mutual funds, index funds, and anything, any product you can almost think of is going to have some sort of a fee or expense associated with it. So you want to know what that is up front before you make any sort of decision at all. The next thing you want to consider is their qualifications. For instance, I'm a certified financial planner, but there are others out there. You might run into a CPA or CFA, which is a chartered financial analyst. And you want to know what their qualifications are because it's important to you to know what level of study they've gone through. Now, being a broker, obviously you have to get a broker's license, like a Series 7, and there's certainly things you get tested on for your knowledge of the markets and things like that. But when you deal with other professionals with additional licenses, they usually have more knowledge in a given area, and that's what you're going to want to know. What's your level of expertise? So if you're talking to say, a certified financial planner, you say, what is your level of expertise? What do you specialize in what you do? They might say, I specialize in retirement planning, as an example. Or I'm really very good in talking to you about investments, things of that nature. And again, there are many different categories of things that they could do for you, but you want to know what's your strengths when it comes to this sort of thing. Next thing you want to talk about is the services and the approach that they're going to make towards your portfolio. Like, for instance, how often will you and the advisor talk? Every 3 months? Every day? Every 6 months? Maybe just annually? How often is there a communication between you and the advisor? And that can be mutually negotiated, of course. For instance, you might say, Well, if the market had a downturn, can I call you right away to see what's going on? And if not, how fast could you get back to me? This is an especially big question because if you'll recall, during major market declines, say 2008, it was very, very hard to get a hold of your advisor or any advisor for that matter, your broker or whoever you were dealing with, mainly because of so many people trying to reach out to those people. And so you want to know, do you have like a staff member that can get back to me? Maybe it's an emergency not related to the market and you need to talk to them right away. How soon can they let you know what's going on? So that's something to think about. What services that they're going to provide? How do you track me? Do you rebalance the portfolios, for instance? Do you monitor it? How often does that happen? How do you measure performance? And do I see that on my statement, which is something you should want to see? And have you worked with other clients like me? And if so, what kind of track record do you have with them? Like, what have you done for them? Now, again, you don't want specific people or things like that, but you want to get a sense of what the performance has looked like for people like yourself. So the next point you want to talk about is, what if we have to terminate the relationship? How is that done? Do I call you up and say, you're fired? I wonder where I've heard that before. Or do I have to do it in writing? And what happens if I do that? Do I get rebated fees back? Or what happens after I terminate the relationship? How long will it take to terminate the relationship? So those are things you want to ask, because while you'd like to imagine you're going to have a long relationship with this particular advisor, it may not be true. You may need to change and do something else. What about conflicts of interest? Suppose, for instance, that the advisor you're with has other side businesses that are doing, such as accounting or things of that nature. And there might be a conflict of interest in some of the things that they're recommending to you. How do they handle that sort of thing? You want to be aware of that. And I'm sure they'll be, you would hope anyway, be open about that sort of thing. Then the next question is actually kind of a thoughtful one. You ask the advisor, him or her, and say, what do you think about the current market conditions? Here you're trying to evaluate how up to date are they on what's going on in the world and in the markets. Now, you're not so much interested in predictions. You don't want the advisor to say, well, the market is down, but my prediction is by the end of the year, it's going to go up 20% or something like that. That's not what you're interested in. Nor do you want the advisor to say to you, I guarantee you I can get you 15% a year. There's no such thing as guarantees in the market. They may try to aim for that number, but there's no guarantees. So if you ever hear somebody say that, you need to run, because that's not going to happen. There's no ironclad way of them to know that you can make 15%. And the reason is they don't control the stock market and the bond market or any market for that matter. And they may be making a professional decision on what they think. That doesn't mean it's going to come true. So be careful with that question. Ask them what they did under other market conditions. Did they, do nothing? Did they get people out of the market? Did they stay in the market? What did they do? Or do you have to talk to me first before we make any decisions at all, whether I'm lowering my risk or raising it or whatever the case might be? These are important things to know when you enter into a relationship with a financial advisor. But the most important question of all is really not even a question. It's the vibe you're getting. What is the vibe like? Is this advisor across the table from you, are they talking above you? Or are they using a lot of acronyms you've never heard? And you're really confused to what they're even talking about. Oh, don't get me wrong, they're probably very intelligent and they definitely know their stuff. But can they relate to you? Will they listen to you? Or are they more interested in, say, selling things to you? There, if you get a feeling that the whole relationship is transactional, I'm here to sell you something, not here to help you with your goals, that's certainly something you may want to consider as a negative. Because the idea of building a relationship with an advisor is you lay out your goals, as we've talked about in previous discussions, and you expect them to listen, and you expect that they're going to work on those kind of goals with you. You don't want products thrown at you, even though they might help, but you want to make sure that you have a comfortable discussion with them. You want to make sure their value system lines up to yours. Are they conservative? Are they aggressive investors? What is their role? For instance, if you were to interview a hedge fund manager, it's certainly an aggressive sort of approach to the markets they take. Are you comfortable with that? So you want to know whether or not you feel comfortable talking to the person there, because let's face it, you're going to talk to them maybe 2 or more times a year about your portfolio. And you want to make sure that the discussions you have help you and not confuse you of what's going on. So I hope that's been helpful. I hope you write that list down, because when you enter in these conversations, this is your money at stake. You can delegate to your advisor the role of investing the money, but ultimately it's you who are in charge. You have the right to hire or fire an advisor. You can make decisions with the advisor and say, I want to go this way or that way. All of those are in your control. Now, are advisors perfect? No. They certainly can make mistakes, and you want to be aware of that. As we said earlier, they don't know the markets, so yes, you can still lose money with an advisor. But at least you have a sounding board. You can have someone to talk to when the markets are going down and understand why a market is declining or what we see on the horizon coming. This is especially helpful because, as we talked about before, panic is not a very good way to invest money. You want to have a very reasoned approach of where you're going. And investing, likewise, is a long-term process. It's not a short-term thing. So we discussed earlier, if you've got short-term money and goals you're trying to reach, stock market and bond market, that may not be the place you'd want to consider. So I hope this has all been helpful. I hope you like and subscribe and share this with others. And consider that when you're doing this, you're making a positive impact on your future self, your future portfolio. And I'm going to leave you again with this thought: to invest or not to invest, that is the decision.